In the United States, as accountants, we prepare financial statements with the objective of communicating the economic results of an entity to many different stakeholders. To communicate these results, we use a common financial language called a financial reporting framework. And there are several major financial reporting frameworks that are accepted within the United States, and that's the subject matter of this lecture. We're going to talk about the authoritative accounting bodies that create these financial reporting frameworks, and we're also going to talk about a little bit about the financial reporting frameworks themselves. We'll then follow up with 3 or 4 questions that you could encounter, or the types of questions that you could encounter on the CPA exam regarding authoritative accounting bodies and their financial reporting frameworks. So let's go on to the very first slide, which presents the authoritative accounting bodies at a 10,000-foot view. Now, to understand the modern financial reporting frameworks and how they work within the United States, we need to go back to the early 30s. In the Securities Acts of 1933 and 1934. The Securities Act, or the Exchange Act of 1934, created the SEC, and along with that, Congress mandated that the SEC develop the rules to create the proper financial reporting frameworks. Well, by 1939, an organization was formed called the Committee on Accounting Procedure. And the Committee on Accounting Procedure was a committee of 22 part-time members who accepted the role of creating the rules. In other words, accounting principles or the accounting rules on behalf of the SEC. So the SEC, in effect, moved to privatize the rules, the accounting rules, by basically allowing the Committee on Accounting Procedure to make to create those rules. And the SEC recognized CAP as the authoritative body. CAP went along from 1939 to 1959, and at that point in time, another committee or another organization was formed, which was called the Accounting Principles Board. The Accounting Principles Board was formed through the American Institute of Certified Public Accountants, and the members of that board were all part-time, pretty much full-time accounting practitioners who would make up now the new the accounting rules. And the SEC recognized the Accounting Principles Board as being the rule-making body for accounting principles. The APB lasted from 1959 through 1973. And along that way, there was a great amount of growth in the U.S., a great complication of accounting procedures and so forth, and rightfully or wrongfully, there is a lot of criticism regarding the APB's responses to accounting rules and accounting requirements. As a matter of fact, there were a lot of complaints that since the APB was represented by accounting firms, the accounting firms were doing the bidding of what their clients wanted as far as accounting rules go. Well, a new organization was created in 1973, and I'll shortcut it a little by saying it was the Financial Accounting Standards Board, or the FASB. The SEC then recognized the FASB as the authority to create accounting rules. Now, at the same time, at the same time, as the FASB was being created, another organization was being created called the Financial Accounting Foundation. The Financial Accounting Foundation is a Connecticut company that basically provides the basis for the FASB, and also a new organization at that time called the Governmental Accounting Standards Board. So the FASB was to create the accounting rules, in effect GAAP, for profit and nonprofit organizations within the United States. The GASB, the Governmental Accounting Standards Board, was to create generally accepted accounting principles for non-federal governmental agencies or entities, and that basically means the accounting rules for state and local governments. Now, in terms of the overall rules, you can imagine that throughout the history of the Committee on Accounting Procedure, the Accounting Principles Board, and the FASB, combined with tradition and so forth, there were tons of rules, and they were pretty much everywhere. You had to really search for them, and some rules became contradictory. So what happened was the FASB created what we call an accounting standards codification, where all the accounting rules from all the authoritative guidance was basically put into a database, and now all that guidance was located within the database itself. The Governmental Accounting Standards Board creates their own accounting rules out of what they call Governmental Accounting Standard Board statements. Now, the interesting thing is the relationship between the SEC and the FASB. As I mentioned, Congress has mandated the authority for making accounting rules with the SEC. So the SEC could drop the FASB and have somebody else take over the rulemaking components of the accounting profession, although that's extremely unlikely. However, on occasion, the SEC finds it necessary to create some accounting rules where, for whatever reason, the FASB was not able to create or decide on. So the SEC may create an accounting rule. At that time, that becomes part of generally accepted accounting principles, and the FASB incorporates that into their accounting standards codification. So now we're talking about the SEC indirectly creates generally accepted accounting principles through the FASB, and also governmental accounting principles for local and state governments are created through the GASB. So now we have two financial reporting frameworks. That's the FASB, Generally Accepted Accounting Principles, and GASB, Generally Accepted Accounting Principles for Governments. There's another body also called the Financial Accounting Standards Advisory Board, and they create the body of accounting standards for the federal government. So this is another standard in terms of what we call financial reporting framework. And last but not least, we have another financial reporting framework is through the International Accounting Standards Board, which is basically International Financial Reporting Standards. The IASB is located in London, England, and their goal is to create a set of harmonized accounting standards throughout the entire world. Their success has been, they've had some success. As a matter of fact, they've worked to harmonize between the FASB and the IASB. They've worked to harmonize some of the accounting rules to reduce the amount of differences. But again, the IASB has a difficult task because it has to deal with not only one country, but many different countries. Some countries have totally adopted IFRS type of standards. Other countries have adopted them with modifications. So that kind of remains to be seen in terms of common financial reporting framework. However, the financial reporting framework of IFRS, International Financial Reporting Standards, is recognized in the United States. So we can see the bodies that have created these financial reporting frameworks here. Now, what I'm going to do is with this click, I should have a little red box that goes ahead and it basically contains the authoritative bodies and the applicable financial reporting frameworks. Now you notice I have down here at the bottom, I say AICPA Code of Conduct, Rule 203. You'll notice that the AICPA does not create financial reporting frameworks that are considered generally accepted accounting principles. What it does is the AICPA, the main purpose of the AICPA, the members of the AICPA, is to render opinions on whether a set of financial information conforms to a particular financial reporting framework. And in order to do that, the CPA needs to have the AICPA point out which are the official financial reporting frameworks. So AICPA Code of Conduct Rule 203 has said that the official financial reporting framework for basically publicly traded nonprofit companies comes from the FASB. The GASB creates generally accepted accounting principles for state and local government accounting. The FASAB creates generally accepted accounting principles for federal government accounting, and the IASB creates the generally accepted accounting principles for international financial reporting standards. Now you'll notice that this may produce a little bit of confusion. Here I have the AICPA, which is the organization of certified public accountants. And again, the CPAs do not create GAAP, but the AICPA has created some specialized financial reporting frameworks, by the way, which are not recognized as GAAP, but they are what we call special purpose type of financial reporting frameworks. The first one is what we call the financial reporting framework for small and medium enterprises. This was a framework that was developed by the AICPA because the type of accounting that was required at the FASB level for small and medium enterprises was, from an accounting point of view, was pretty prohibitive. So the AICPA took it upon themselves to create a financial reporting framework. However, it's important to point out that is not GAAP. It's not recognized as GAAP because even the AICPA doesn't recognize that the financial reporting framework for SMEs as generally accepted accounting principles. But the CPAs can attest that financial statements were created within the financial reporting framework for SMEs if they so desire. Also, another type of financial reporting framework is what I call the traditional non-traditional ways of accounting, and this OCBOA, and that stands for Other Comprehensive Basis of Accounting. And these are typically financial reporting frameworks that deal with when you're doing cash basis accounting or modified cash basis accounting, or you're accounting based upon taxes or regulatory type of requirements. So what happens in this case, again, these are not considered generally accepted accounting principles, but the CPAs can basically attest to the financial statements that are produced by these OCBOAs, even though they're not part of generally accepted accounting principles. Go ahead and take a look at number 1. Which of the following accounting bodies is recognized as a current authorized body to set GAAP for publicly traded companies? And you're given 4 choices. So again, take a look at the question, come up, stop the video. When you stop the video, then select your answer. When you've selected your answer, restart the video and go on to the answer slide. Now, the FASB has created the Accounting Standards Codification, which now embodies GAAP for non-governmental, for-profit, and non-profit entities. You can imagine the body of accounting rules prior to the codification was that they were rules that were made up by by tradition, by practice, by the Committee on Accounting Procedure, by the Accounting Principles Board, and all the lists of rules made up by the FASB. All those rules now have been condensed or accumulated, I should say, in this Accounting Standards Codification, which is easily referenced. So when you have to look up rules, you can look up all the authoritative guidance within the codification. Then if we take a look at D, the GASB, the Government Accounting Standards Board, does set GAAP, but it sets for non-federal governmental entities, which again are... Now let's try number 2. A publicly traded, U.S.-based, not-for-profit provider is researching how to treat research and development costs. Which of the following would be the most authoritative in researching this particular issue? We have 4 choices. What you should do now is stop the video, analyze your choices, come up with an answer, and restart the video and take a look at the answer slide. Okay, number 2, the answer is C, Financial Accounting Standards Codification. If we take a look at A, that says GASB standards. Okay, if we take a look at our definition of it's a not-for-profit organization, but it's publicly traded, so it's not a government entity. B, IASB standards, and in this case, it is a U.S.-based entity, so it's going to be reporting using U.S. GAAP. C, FASB Accounting Standards Codification. That is, the FASB has created this codification, which embodies generally accepted accounting principles for non-governmental, which this is, it's a publicly traded organization, and for-profit and non-profit entities. So that would probably fit C. Then we take a look at D, which is the Financial Accounting Standards Advisory Board. That's the federal advisory board for setting accounting standards for the federal government. Okay, let's go on and try question number 3. The city of Grand Fenwick is located in South Dakota, and it's establishing a golf course. And this golf course is intended to earn a profit, even though the city owns it. Those profits are then going to be transferred to the general city fund for their general use. What accounting standards would be applied to accounting for the golf course? And you have different type of standards. Again, stop the video, make your choice, and when you're done, restart the video. The answer in this case is A, Governmental Accounting Standards Board standards. Now, since the golf course is part of the city of Grand Fenwick, it would be subject to the Governmental Accounting Standard Board standards because it is still part of the government. And the GASB is recognized as the authoritative source of generally accepted accounting principles used by state and local governments in the United States. Even though this is a profit-making entity, it is still within the government, and GASB standards has special provisions for portions of government entities that are profit-seeking entities. So that would be the correct answer in this case. Let's try the last question, which is number 4. Number 4, this is a question we have not really gone over. This is what I call a learning question, whereas you may or may not know the answer. If you know it, that's great. If you don't know it, you're going to learn something from this question. Number 4, entities that are subject to the Exchange Act of 1934 must file annual financial statements with the SEC. Which of the following is true regarding the filing of financial statements with the SEC? Again, you're given 4 choices. Stop your video, analyze the answers, make your choice, and when you're ready, restart the video. And the answer in this case is B. A foreign-based company may file financial statements using Generally Accepted Accounting Principles, or IFRS. So when a foreign-based corporation issues its must-file financial statements with the SEC, it can use either option. In the case, the other thing to note here is A, where it says a U.S.-based company may file financial statements using GAAP or IFRS standards, and in that case, that is wrong. The U.S.-based company can only file financial statements using GAAP. The U.S.-based company cannot use IFRS standards. With that, that's the end of our presentation, so thank you so much for your time.